Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
What's up, Dan? We're back.
We're back, man. Back on the couch.
And we got somebody very special sitting in between us.
Yeah.
Ladies and gentlemen, we have to introduce Chris from the Garzella Group. But first, today's fun because we get to peel back the curtain on insurance, one of the most important topics, but probably one of the most least talked about as it relates to real estate investing. So I'm so excited that you're here, buddy.
I appreciate it, Marv. Thank you so
This
much.
is going to be
Thanks,
fun.
Dan.
Yeah, it's a lot of fun. Yeah.
We got to make insurance fun today.
We have to make it fun.
That's our
right?
job.
That's how I met Dan. I was like, listen, I said, when I met Dan Garzella, he's like, hey, man, you want to come on and do this stuff and grow? I said, if it's hard and it's fun, let's do it. He's like, you can make it as fun as you want it. So I have not stopped. I live every single day in fun.
Nice. I love it.
Yeah.
Yeah. For those that don't know you, give a short background. What are you up to?
All right. Well, thank you so much, Marvin. Again, Chris Stenke. So we're at the Garzella Group. Garzella Group started 2014. Dan Garzella started with, and it's actually on the wall in our office. He started with $500 and a scratch agency, right? And decided that from coming from farmers, he needed more options for his clients, right? Can't do that with single products. And decided to start the Garzella Group and took about 6 folks and met Dan around that same time. I was one of his first corporate consultants, aligning his values to deliverable behaviors within the stability of the company, and worked with him for about 4.5 years, and then popped inside when we started getting really big as vice president. Wore a couple hats on that, still vice president. We're still wearing a couple hats on that, but now we've grown to pushing Garzella Group soon to essentially a holding company. We've got 5 companies underneath specific to the lines of insurance, growing and essentially having fun doing it. So, but yeah.
No, thank you. That's
awesome.
But we're not just talking any just normal insurance. We're talking strategic.
Yes.
To help folks build wealth in real estate. Can you elaborate a little bit about that?
Yeah, strategy, it's to your point earlier, right? It's insurance is a requirement of a line item unless you're going to self-insure, right? People don't want to take that risk. When we're strategic, when we say that, we have a term, we don't schlep insurance, right? We work with the clients. A lot of things in the ignorance related to insurance is they don't really understand how, number one, it can kill a deal, which is important to the mortgage and real estate side, right? Based on DTI. But also, if you don't have a lot of products specific to the client use case, you can't help the client, right? So we've been able to align with a lot of good carriers. All our carriers themselves are constantly evaluated based on customer service, products they provide, pricing, rate increase, so on and so forth. So we stay ahead of the game in order to keep our retention up. But we do that also by way of delivery of service. We're risk managers. We don't sell insurance, right? We evaluate risk. And then based on the totality of cost on that risk related to what they're intending to insure, we've figured out a model that, when you treat a customer really well and you truly work for them and their best interest based on the deal, we think through that sale beyond just insurance. We ask them, what's your end goal with this? What are you insuring? What are you doing? And then we use that in order to create what is the best solution for them. So we put time in. That's one of the differentiating factors in how we do business.
Oh, I love that. Thank you.
A little customer service, Marvin.
What's that?
Customer service.
Yeah, that's huge.
Imagine that. Imagine that.
What is that?
What is that? Imagine that.
Yeah.
That sounds pretty good. Well, let's get into some insurance is a never
never the funnest topic, right? I mean, I know you said you're trying to make it fun, but I think you're just fun. And like,
Well, thank
insurance
you.
itself is just, it's like you said, it's like a means to an end. You have to have it.
Yeah.
A lot of times especially if you're getting a mortgage on something,
Right.
you absolutely are going to have the insurance. There's been a lot of change going on in your industry, a lot, right? We've seen significant premium increases.
Right.
But I don't think that means you're out driving a Lamborghini, right?
No.
Okay.
No.
Yeah. So
Yeah.
let's unpack that a little bit. Why the rate increases right now?
Well, think about it, right? Increase is just beyond national inflation. You can put it under that gray cloud that people are like, well, that was a dumb way to say, hey, do you really know or do not know why it is, right? Then you unpack that a little bit, right? You're going to go build a facility today versus 5 years ago. What are the mainly two factors that will cost more today? Material and labor, right?
Yeah.
Insurance is just that. It's assessing the risk and insuring a property, not blindly because they have to do inspections, but a lot of the carriers that take on this risk to essentially cut you a check when something goes wrong. That check that they cut is dictated by the variables on the back end. So anytime inflation hits, like these tariffs are about to hit, who knows what's going to happen, right? Nobody knows.
Yeah.
But essentially, you have the factors of labor, material, right? Adjusters, all these different factors that in the aggregate create what they would consider premium increase. Now, in insurance, there's several ways to look at it. A carrier is not just a carrier, right? You have carriers that are essentially oversaw by the state per state. So every state is different based on the requirements. So when you look at the cost factor associated with all that stuff, you look what was it 5 years ago? If you were going to work at McDonald's or In-N-Out, you probably get an employee for $9 to $10. Right now, they're doing it $17.
Yeah.
So when you look at the transferable inflation on cost on rebuilds and materials, guess what happens? Then naturally the insurance goes up because they have to hedge against the rebuild or what's called reconstruction on that property.
Right.
So that's essentially how the line rolls.
Yeah.
And again, states do their best job to keep rates as low as possible.
Right.
But again, then you have another market called E&S market, surplus market. They can essentially state what they want to, right? Because anybody can be insured. It's just what do you want to pay for it?
Right.
Right. What's the risk on that?
Yeah, you'll pay for anything, right? I mean, you could insure anything if you wanted to.
Correct.
It's just how much you're willing to pay to have that thing insured.
Yeah.
But yeah, that's interesting. I guess I think a lot of people maybe have lost sight of that, right? Like when they think about the insurance premiums going up, they see the big fancy buildings with like Progressive on it or, one of the big carriers and they go, well, my God, of course these guys are gouging me. Like they need all this stuff, but they don't think about, well, no, I mean, if the house burns down, you buy a rental property and it burns down and you've got to replace it and rebuild the whole thing. It comes with a cost, right? And that cost is broken up and there's obviously some formula that says, okay, this is the cost to replace it. Therefore, this is your monthly or annual premium that you'll pay in advance. And it's gone up a lot. I mean, on my rental properties alone, I've seen about a 26% increase on my stuff. And then I was with a friend of ours that's got a place in California, and his premium on his home went up 115%.
Wow.
On his home. Because he was fairly close to where the fires were recently. And they went up 115% on his house. So, it's wild times. I mean, we're seeing it across everything, and I don't think insurance is alone in this. But
no, not at all. And when you look at it too, Jay, so you have a catastrophic event happen, right?
Yeah.
California itself has a supplemental program called California Fair Plan. Right, it's a pool of monies to help offset the total cost related to the insurance for California. Now, when you look at it from a pooling perspective, just like when you're creating a fund, right? Some of the unintended consequences specific to where you are essentially where your policy is at also can be creating a uptick. Yeah. So any type there's disasters, national or self disasters. All those things itself affect the back end of what's considered the fund that is supposed to protect all appointed folks that have policies with that entity or that carrier.
Yeah.
So a lot of factors, not just related to weather or related to, whether it's natural disaster or there's also that thing called fraud too, right? We have a saying, don't use your insurance as a way to offset your losses. Don't do that, right? Because it'll affect everybody, right? It's just one of those things. So very complicated. I came from the intelligence community where we were launching satellites. That was my last job in uniform. And you're talking Gantt charts that are 10 years long, about the size of that wall. Very complicated process, right, to get things to orbit to hit a target that big right from the ground, which is a lot of smart people. But insurance also is very complicated, right?
Yeah.
A lot of algorithms,
A lot of factors.
that dictate that. But goal set, essentially, especially with customers, is making sure that you have what is the right line of insurance that you have. Are you overinsured, right? Are you underinsured? Are you actually answering the phone call when they do the inspection so you don't get dropped when you get a good rate, right? Because again, just like in any type of portfolio that's about to take on a lot of money and investors, right? The evaluation, there's checkpoints to make sure that this is legitimate, right?
Yep.
Same thing with insurance.
Yeah.
So, there's again, a ton of variables. We could be here for probably 15 years.
Yeah. So most of our audience, they're mainly real estate investors,
Right.
And they range from somebody that's waiting to buy their first investment property and learning about that all the way to somebody that's a seasoned vet.
Right.
The experience with you guys, what I've noticed is that, it very much becomes a consultative approach.
Correct.
So maybe share with them what they could expect, right, as coming in, meeting with you guys. Because I think what I was used to prior to was the checkbox of just getting the insurance quote. And I was like, I got it. Didn't even know what it said, really.
Right.
And then I just was like, yeah, fine, whatever. That's it.
Right.
That's changed now. Now I'm reading these things and I'm interested in it. But somebody coming in, let's say they're buying their first rental property.
Right.
I'm sure it goes beyond just their rental property. Like you guys are taking a holistic approach across all of
100%.
their stuff.
Yeah, and you hit it on the head, right? I mentioned it earlier, we're risk managers. We're not schlepping insurance, right?
Yeah.
We look at every relationship as a business partnership, right? We do our job and our due diligence based on your risk. Two things happen. Number one, they're informed.
Yeah.
You inform a partner on the why, it's amazing how they can understand the cost a lot better, right? Number two, options, right? Being a broker house, we got options.
Yeah.
When you have options, it gets, we can get creative with the intent to get you the best coverage at the most competitive premium. So do that like rental properties you mentioned earlier, because we do a lot of with you guys and a lot of our partners, Phoenix REI, and some of them they'll go and create an opportunity for themselves, which is said, okay, I got a single family home and now I just want to rent it.
Yeah.
Perfect. Or I want to essentially change it to a 5 and 5, 6 and 6, right? That comes with different lines of insurance that may not be an understanding factor going into that investment approach, but we work with them to understand here is what we considered once you get approved, your fixed cost for this year. But do you have the proper lines of insurance that if something does happen, they're going to do their investigations? And if you have a property and it's just a single family home, but you just have a single family home policy and not a rider as a renter based on what use case of renting, something goes wrong, you try to create a claim, guess what? You get the big denial.
Got a problem.
You got a problem.
Right.
And that's also where we come in too.
Yeah.
We are risk managers, so we are partners with you. So when things do go sideways, right, the insured isn't supposed to be an insurance guru, right? We have the responsibility to write in the policy, so we work with them. We advocate with our clients to the carrier.
Yeah.
We don't work for the carrier. We work for the client.
Right.
We work with the carrier, with the underwriters, with the processes.
Yeah.
So we do our job on the front end. Folks can now leverage understanding where that line item monies are going, but leverage also the understanding that, okay, I'm insured properly.
Yeah.
So
Yeah. So you shouldn't lie to your insurance partner.
Yeah.
Right? You got to give them tell them everything.
I used to do polygraph too there, Dan.
Yeah.
Yeah.
I know.
So,
Don't
I know.
lie to them.
Yeah, don't
can't-
lie.
not
Be
the person to hide
transparent.
from.
That is the
Yeah.
most complicated thing.
It's very complicated.
Because you have car insurance, you have home insurance,
Right.
you have medical
Bundle it up.
insurance, and 90% of the folks that buy these, we don't know what we're buying. All we're doing is checking the box because we have to.
because you have to. Yeah.
Right? We have to. So
Yeah.
I got a game for you. This is Mythbusters. It's easy, trust me. I call this the
Am
insurance
I allowed to
edition.
lie to you on
are.
the answer?
Let's
'Cause
see.
That's the whole precedence we're setting out there.
So
Okay,
a
let's
couple
go.
questions. So all landlord policies, do they cover all tenant damages?
Well, it depends on you're gonna get the lawyer answer. So all policies set up correctly dependent on the tenant. So you have multifamily, right? That itself is considered a commercial policy. Then you have another line item if the master policy requires that the occupancy rate be X, right, to satisfy the master or essentially the commercial policy. Then it also requires tenants to have insurance too. So when you have a line item of insurance per door, which essentially is the renter's insurance, that satisfies in most cases the requirement for the actual policy. Why those things are in place and super important and essentially relatively cheap is a way to displace risk of your occupants. So if the use case of that property is X, Y, and Z, investors do the due diligence. Don't listen to Dan Noma and lie. But I know you're joking, brother. But do the due diligence and tell the truth what the use case on it is. Let us do our job and formulate a conclusion that's going to be in your best interest as the person truly holding the total risk on that property. Worst case scenario is you don't tell, or that use case, or you don't have those policies, those renter policies in force. You're not going to go after the renter because you can't, in some cases you can't squeeze, out of a turnip. But what that does is it rolls up straight to your policy. When it gets affected, let's say I'm going to just generically X%, that's where your premiums start to go up. Or if you're going to, in some cases you may get dropped because you failed to read the conditions related to that commercial policy. So when that happens, then that becomes the bad day gets worse, right?
Yeah.
So
Yeah, no, I appreciate that. Is insurance shopping all about the cheapest price?
no, cheap doesn't always mean good, right?
No.
Ask me because I buy cheap sandals. Sometimes they last about a month and a half, right? It's about competitive pricing and most important, satisfying the requirements that gives what is the best coverage on the property, right? You look at customer service. We evaluate our carriers all the time. We're looking at how much time does it spend you on the phone if you're essentially calling your carrier. That matters to us, right? Because you're our customer. We don't want you to say, hey, you got this all this stuff, and all of a sudden you're waiting for 2.5 hours, right? So it's not just about cheapest, it's about what is most competitive based on the risk case. So you may have a policy that is a lot cheaper, but what it covers and the conditions of what it covers may not satisfy the requirement for your loan. That's the big key factor there, right? I just got off the phone earlier with Lewis. He's our vice president of sales on the PNC side. And this guy requested, he's like, listen, I want a policy, but I want to exclude the roof and I want to exclude these other things. And I'm like, does he understand what he's doing here? Because you look at, and if you start to self-insure, well, essentially take on those risks yourself, the amount of monies you're going to spend on certain things, and Lewis's point, he's like, yeah, we can write it anyway, but we don't advise it. I told him heavily, I would not advise you to do this because you may not think it could not happen, but that's what insurance is there for, is in certain situations, you want to make sure you've got the best product in place, right? Based on the totality of your risk,
Yeah.
right? So
Oh, I love this approach. I love your consultative approach. What are you using this property for, and how can we best serve you?
exactly. How do we serve you?
Yeah,
Absolutely.
I love that. Me and Dan, we love wild stories too. We love horror stories.
Yeah.
So give us a few. Let's have some fun with this. Like, give us a few stories that happened where folks may thought they were covered, but maybe they weren't.
You're going to go into my Rolodex real quick.
Or any wild claims that you've seen.
Whew, that's also you're gonna stump me on this. I'm going through my brain because I stay on the positive side, unfortunately. But it's I may have to go to a phone for this one. I'm not sure.
Phone a friend.
You have situations where people will. Oh, we did have a good use case. We had an evaluation a while back on a property. This is why it's very important when you talk to, regardless if you come through us at Garzella Group or by way as a partner with lowermydti.com, which is our platform for real estate and mortgage. Got my plug-in, but phenomenal platform. You can get access to all the carriers and everything. So, but we had a situation where the insured lied about what they were insuring, in respects to saying they had X amount of properties and their occupancy was X, right? So this is a bad use case. Well, if it's not verified, or essentially when the policy was written and put in place and these things weren't as the insured said they were, guess what happens, right? Claims get denied. There's nothing we can do for you. Because when you lie on the front end, it will hit you on the back end. So it's like you just shelled out, let's say X amount of money. Let's say it's high premium, $10,000 to $15,000 or $20,000 a month on a commercial, and now you just spent that for last year. Something does happen where you're trying to put a claim in. Well, we go and inspect it, right? When we go and inspect it, and we realize that you said that there was a standing facility here, and it's all concrete. There's no standing facility here, right? We've caught people, whereas, and we're very polite about it, right? But, golden rule in insurance, tell the truth, and essentially don't go with the intention to fraud to just get access to the cheaper policy. It'll cost you a lot in the long run. It's just not fair to anybody. Right? So
no, that makes sense. So Dan can't lie.
I understand. Yeah. Not to your insurance guy.
no, don't lie to the insurance, because then we don't have any leverage to help you in a situation.
Yeah,
right?
No. I had one. I had a claim where this was wild. So one day it was my own house, right? So it wasn't an investment property. It was my own house where
I remember this. Actually.
I looked at the counter island, and it had like this little water stain next to it. And I was like, oh, what the heck is that? And, it goes on for a couple of days, and I'm like, okay, bring in a plumber. Plumber's like, there's no water in the island. Like, I don't know what this is. And it turns out what I had was a slab leak. So, the pipe goes underneath the slab, and the water had found like a little crack or whatever there. And that's where it decided that it was going to show its teeth. But the pipe was under the whole slab of the kitchen. Yeah. So we had to move out of the house, jackhammer up all the floors, replace all the floors, replace the whole kitchen, everything. Because they could, you take the cabinets out, you can't just put them back. They had to replace it all.
Right.
It was a monstrous thing, and then we got displaced, so we had to go move out. And, they took care of it all, thank God. But that's the kind of stuff that people don't think about, right? When you're buying a house, you're in a rush. Buying an investment, you're in a rush. You're trying to get everything done until it happens to you. Then you realize, oh my God, I'm so thankful that I have it now, and that I had the right policy at that point too. Because
absolutely,
that was crazy times when we
coverages and hopefully I'm assuming it wasn't a post tension slab too, because those are like 25,000 pounds or what have you. So you can't even go in. It
they had to re-engineer the floor. I mean, it was it was definitely a thing. That was wild. But even I had an issue, or I guess it's probably more of a question. I have a little 10 unit building here in Phoenix, and it's kind of a Class C property, 10 unit building. And for a while we were asking the tenants to get insurance. And then my property manager kind of moved away from that and is no longer requiring that the tenants get insurance. Why? Like, why would you or would you not require a tenant to also get insurance on a space that they're living in?
Well, it's the prerogative of the investor.
Yeah.
Right. And it's the requirement on their master policy. All goes back to the policy. There could be conditions in that policy. And are you with us on that one?
No.
You will be tomorrow, right?
Yeah.
Perfect. Perfect. Appreciate you. Good hard sell. See that,
Yeah.
Marvin?
I love that.
So all kidding aside, I
Yeah.
would highly recommend you have us look at it because, you carry the full risk on it, right? And again, if the conditions in the policy that you have require your renters because they're people that aren't you paying the bill.
Yeah.
There's other people in there. You can't control the behaviors, habits, or anything of other humans, right? Unless they're incarcerated, which we don't like to put people in jail. But it's you're running risk, right?
Yeah.
But the bonus upside of it, there's a lot of programs out there. Like we just partnered with Lock and Key. And their long-term rental line item of insurance called a tenant legal liability. What they do at a very low cost per door is they're able to basically supplement the insurance. So when a incident happens because of the renter, right, they're able to subrogate the cost of that damage down to the renter. That's what you want.
Yeah.
Right. Because you didn't create that problem.
Yeah.
Right. They did.
Right.
So when you have that supplemental insurance and require the COI, it doesn't stop there. Because we found cases where if they don't have a staunch system on the background or a plug-in where if Marvin's renting, not say he would do this, right? But let's say he shows you your COI and then 2 months later he cancels it. You think that his door has a policy in place, but
Right.
you weren't notified as the named insured for some
Yeah.
reason, right?
Right.
Now Marvin's causing you risk on your policy. That makes sense?
Yeah.
So, we going back to that customer service
Yeah.
and risk management
Yeah.
consultation you talked about earlier, we keep an eye on a lot of those things. If we can't manage it, we can't tell you what you're doing or not doing right or wrong, right?
Yeah.
That's where we shine, and that's essentially our probably biggest value prop, right?
Yeah.
Is how we approach insurance. And so again, the bank itself will set the loan, right, will set a lot of the requirements to protect their asset, right? You're borrowing the money. But when you have rental properties, it's relatively cheap to maintain that peace of mind, but also goes to roll up to your master policy.
Yeah, the flips too. I've noticed that a lot of flippers that buy properties in cash, meaning they're not using any debt or anything to buy them,
these guys,
that they're not insuring the property, right? And a couple of times I've asked them, and they're like, "Well, I mean, I'm tearing it apart anyways." And I go, "But what if it burns down? What if you have all these guys? What if someone falls in the house and gets hurt, right?
Correct.
Like, if anything, I think that's probably creates more risk, right? So I've always bought the like a policy on them when I'm flipping it, and I just tell them I'm flipping it, and you pay a premium for it.
Yeah.
But there's construction people walking around with nail guns, like legitimate stuff that could hurt people.
Yeah.
It seems like you should have insurance on that.
Oh, yeah.
Yeah.
Yeah. When you're doing construction, depending on the requirements and the size and scope of the construction, there's lines of insurance for that, right?
Yeah.
Builder's risk, right? That's what
Right.
it does. It just covers for the duration. It's running risk. I've ran it a lot in our network, right?
Yeah.
One of our good friends, Dina Jones, amazing at Fidelity, and she's introduced me a lot of people. Some of them are running risk, and it's like, I'm going to self-insure half of this and none of this, and I'm like, okay, well, you can do whatever you want. It's your prerogative.
Yeah.
If we can help you out. But you look at like any type of fail safe, like you get a big loan, sometimes you have to have a bond on these things because the predictability of performance of that is who knows. But
Right.
do you want to lose everything?
No.
Is it really worth the risk? But again, people have their own prerogatives, which we're fine with.
Yeah.
But we're just here to help consult
Right.
and say, hey, here's the downside of this. But we don't, unlike how I just hard sold you, and
Right.
we'll see the policy by the
Force
other day. Yeah, you did
Yeah.
it. We don't force sales. We don't do
Yeah.
that. It just, again, we can consult. right? We're risk managers. We consult.
When is like a real estate investor, when should they consult with you guys? Like where in the process is the best moment to get involved? Is it after we've got it under contract, in advance? Like,
Yeah,
where?
it depends on where it's at, right? If it's Phoenix area, we're pretty quick, depending on the risk, right? Depending on the carrier, that may require the inspection before or after, or you may need before, because they want to make sure that they have eyes on what they're about to write their name to reconstruct. Mortgages, we'd love it as soon as possible. As soon as the deal's real, flips into escrow, that's our sweet spot, right? We have a lot of partners that, and this is a true story. These are true stories because I like to build relationships. I like people, except Marvin, but I'm joking. But with that being said, like we have people calling us on 5:30, 5 o'clock, or I'm sorry, 12 o'clock on a Friday. This real world happens. They're like, we have to close by this and this and that, blah, blah. And I was like, okay, when escrow open? It's like, well, opened like 29 days ago. I said, why are you calling us now? Well, my client said they had it figured out through their brother's cousin, this and that. Well, that's great, but did they understand the requirements in your loan and their DTI, right? Insurance can affect DTI.
Yeah.
This is magical,
Yeah.
right? Because that line item of insurance is a requirement when they're balancing the actual loan and the DTI. You're at the finish line. You have locked rate. Guess what happens to rate after it expires? You got to go back to market and relock rate. So sooner the better. Right. We have a use case right now. We're about, 120 days out, a very large property here in Scottsdale. And a guy got us all his stuff and we just keep in touch with them, gave him impressions. We can only give him impressions. You can't lock rate, but once we get closer, we'll lock rate. So he's got the insurance stuff figured out. This is a, very large build and multifamily unit. Beautiful, actually, down the street from here, not too far from here. But those are the people, you give us time, we can shop markets. You don't give us time, we have a limited amount of time to truly look at your holistic risk.
Nice.
So,
Yeah, I love that.
easy.
Yeah.
Now I want to sit down with you because this is awesome. Protect your dreams is ultimately what we're trying to tell our investors.
100%.
This can make or break it for sure if you have a claim or something goes wrong. But I want to double down on this consultative approach. Can we come to you with our portfolio and you do a full review from an insurance
100%.
lens? Nice.
Yeah. We're very easy. I mean, Dan knows we've been, work friends for a couple of years now. We're responsive. We tell you the truth. Sometimes people don't like the truth. Sometimes people are like, dude, you're like almost uninsurable. We really had to work hard and we had to blend different carriers just to get the mix of what you've done in the past together. But yeah, bring portfolios. We love portfolios. People have a misconception of insurance. You don't get rich overnight doing insurance. It's a long runway. Right. You can't have this magical deal that automatically you can retire. It doesn't work like that. We work essentially in good partners, which are our clients, right? And we work in volume. Portfolios is our sweet spot because we have such a huge carrier mix. All different lines in the back end. We stay appointed by these carriers because of our loss ratios, right? We do pretty well on looking at the holistic view, looking at the goal of the client, and then getting there, right? And we don't essentially overinsure, right? We'll look at some cases. It actually came from the Phoenix REI group, if I remember correctly. And this person was well overinsured. I'm like, dude, you're like double insured. He's like, yeah, I just did that just because I wanted to. And I'm like, okay, but you're overinsured, man. He's like, should I not? I'm like, well, if you're just giving money away, I mean, what do you want to do here?
Yeah.
Right. So for balancing true wealth building, it's how smart, like Dan's extremely brilliant. I always brag about him. He pays me through Venmo. But no, all kidding aside, he's very brilliant on how he aggregated his business scheme and this whole mechanism. I fell in love with him. First met him, like, dude, I love it. Dan Garzella said the same thing. He's like, oh my God, this dude's smart. I'm like, yeah, but don't overinsure, right? Yeah. Make sure you're taking those portfolios and essentially work with the professionals. Is what we do for a living, right? And we're passionate. We love what we do, and we care about people. So
it's awesome. Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.